All right, hey there. Good morning there, everybody. Chris Franks with Texas West Capital. It is just a few minutes after 11 a.m. Central Standard Time here on a beautiful north of Houston day. Friday here, right? So hopefully y'all are doing all right. We've got extended declines going on across the legacy markets there. We've got Bitcoin kind of overall still looking down, unless certain levels are overcome. So we'll talk about that today. But until that point, default should be with the trend, right? We're always looking at the trend. And so we'll look for further downside unless we do get those breakouts. Let's see, what else happened? We've got a lot of stuff happening. Let me say hi here. First of all, Bill, good to see you. Merrick, good to see you. Alex, hello, sir. Hoping you're well after the move. Man, I'll tell you what, I'm still messing around with that. I hired some movers that just absolutely a pain in the rear end, have cost me a lot of money now. So there were still some few things left at the other house I've got to go pick up tomorrow. So yeah, good times, right? Just goes to show you, it doesn't matter who you are or where you are in this world, you can still end up dealing with people who cause you a lot of issues, right? Data, good to see you, man. Anyway, so yeah, as always, guys, you can join us here at howtotradetowin.com. We'd love to have you there. Tier 3 is where it's at. We got everything going on there. Especially the education. That's where it's at, guys. Well over 200 hours of it now. 3 hours or so added every week between an hour of Wyckoff, an hour of Elliott Wave, and then an hour of price action. So lots of stuff in there. I think we've got probably 40 or 50 different I've taught 40 or 50 different techniques, rules-based systems to enter trades on. Some of them, one of the biggest problems a lot of times traders have is they're scared to exit a trade because they're afraid that that if it pulls back, then it'll keep going higher, and they feel that they got lucky getting in. So a lot of these strategies, that 40 or 50 different strategies that I've taught over the last couple of years, that you have access to in there in Tier 3, teach you how to get into these rules-based systems. Simple, guys. If it does this, then you go in here and you put your stop loss here and you follow through with it. So we've got all that available and so much more. Anyway, we'd love to have you there. Man, I've said it so many times over the last few years, guys. What I do here, I'm just a guy that does a thing, right? I think what really makes us pretty great is our members. Again, not everybody talks, and that's okay. You can come in and just observe and absorb it all and kind of do your thing. But we do have a lot of members who talk, constantly, and they discuss their ideas of where they're entering and where they're exiting and why. And man, they're always quick to help out. So I think our membership, man, that's where it's at. The people there are just fantastic. So anyway, hey, Bamboo, good to see you, man. Driving and listening. All right, as long as you aren't driving and watching, right? Oh, man, let's go ahead and jump over here, guys. Bitcoin, right? So as I said, default is down, right? The trend is down. We can zoom out here a bit from higher up here, right? The trend is still down. Overall, the big trend here, and then even locally right here, right? We're coming up on that S1 pivot. We're seeing kind of like right above that. And so as you can see, the daily Stochh RSI here has dipped down and oversold, and it's trying to cross bullishly. And then again, as you can see here, we've got this sideways here kind of happening. You see that we got some volume. We had this rally. This was with the Fed, with the interest rate, right? So that was that right there. Drop back. Yesterday, bullish engulfing candle here. Today, pulling back. Again, guys, overall, even if we're just looking locally here, overall trend is down. But, ultimately what we're looking for is a breakout above this point here. This is at 22,800. If we can get above that, then that suggests this is 3 waves down, which is corrective, and we should rally up higher. I mean, ultimately, that's kind of where it's at. Now, locally, again, if we look at this could be like a 1, 2, 3, 4 is the triangle, 5, right? Then rally back up, and then 1, 2, 3, 4, 5 potentially here as well, right? So, locally, while we remain above this swing low here at 18,153 and 13 cents, it's still possible we could break out higher, right? Again, daily setting up here. Daily has this nice bullish divergence going on, as you can see here as well so far. Let's jump over here to the 4 hour. 4 hour, we did have bullish divergence right here, which led to this rally up into this wick up here is supply. So this is that supply structure. So we rallied up into it. Matter of fact, I think we got about halfway into it, which is normally, where we'll look. Those supply structures aren't always just your wicks. But let's see here. Yeah, so if we pull this up here, look at that. Almost to the EQ right there. Drop back off, right? So, again, 4 hour has room here before it heads, before it breaks down into oversold. So, again, daily says potentially bottom, could go further. 4 hour says, yeah, could go further. 1 hour says, well, we're down here, but we haven't had oversold in the RSI. So again, leaves a lot open locally, right? And that makes sense because we're just sideways, right? We're sideways between the swing high and the swing low. This is all range bound right here. Now, the way I'm kind of looking at this at the moment, I've got maybe like a 1, 2, and then 1, 2, 3, 4, 5 gives us 3, 4. And then quite potentially, a 1, 2, 3, 4, 5. And then that would give us a 1, 2, 3, 4, 5 gives us A, B, and then potentially C here. Now we can see the retracement so far off this is only 70.5, and that's that institutional level. So, we're gonna watch it now. We're gonna see if we can get this rally. Locally here, if this is the bottom, then a breakout above wave B here, this $19,077.09, we'll add confidence to it and suggest that we should be headed up higher. Wave 3, based on this swing low here, wave 3 has a minimum expected target of 20,829. So that's what we're going to say. I'm not saying that's what's going to happen. I'm saying that right now, we're range bound right now. Again, between the swing high up here and the swing low here. So until we get a breakout or a breakdown, we're kind of in no man's land. And the problem is a lot of traders get in here, right? They get in here. They don't even get up here and sell. They get in mid-range. And that's the problem. You don't want to do that because price can do either thing, right? And you don't know what it's going to do. So, it's usually a good chance. It's a good thing to wait. Now, luckily with Elliott Wave, we can go in here and count and say, okay, well, if this is the case, then, this should be wave B. And if we get above there, adds confidence to the count and, potentially a chance to go long, right? So what would I do? If I'm sitting here like this and I see this, looking for the breakout above wave B, right? If I get that breakout above wave B, then to me, that's a higher confidence trade. And so I would go long with a stop loss right below the swing low here, right? And in this right here, you want to make sure that if you hit your stop loss, you don't lose anything more than 1% of your total portfolio, okay? And that's the trade. I mean, that's what you do, right? You don't enter here. You don't go long, you don't go short right here. You just look for the breakout here, right? If you don't get that breakout and it breaks down below here, well, now all of a sudden it starts looking like, okay, we might end up going down below here. Now, what's the other possibility? Well, again, if this is 1 and this is 1, 2, 3, 4, 5 is A and then B, right? Then if we break down below here, it's possible it could be a 1, 2, 3, 4, 5, but there's just not a lot of room there, right? There's not a lot of room. Now, we do have supply down here, right? So demand. We've got demand down here. And so, it's possible that we could get a deep pull down to the 90% retracement. So we could do like a 1, 2, 3, 4, 5, maybe as an in diagonal here. But, as always, the closer you get to the invalidation level, the more you should necessarily lean the other way, right? On follow through, on breakdown. It doesn't mean it has to. Remember, as long as it doesn't breach that invalidation level, it's just possible to really deep wave too. And it happens sometimes. But, again, as traders, we generally work with what's most likely to happen, right? And so generally, most of the time, if you're getting around this 90% retracement, most of the time it means you're going to continue to fall through. Okay? But again, as I said, you don't want to just enter just because it's getting close. A lot of times traders get anxious. They get very impatient, and they try to enter before it actually breaks down, or they try to enter before it actually breaks out, right? Thinking they're going to get ahead of it. And most of the time, that's going to leave you, getting rejected and drop lower. So don't put yourself in that position. Have some patience. look for the trades to set up for you guys, okay? If there's one of the big things other than, risk management and only taking, the higher confidence trades, it would be to actually have patience, to wait for the setup. Don't get impatient. I mean, and sometimes it's hard. Sometimes price sits there and goes sideways for a while, right? And it's tough to kind of sit on your hands. You feel like you're going to miss something. The problem is most of the time when you feel that way, and so that causes you to enter, you usually lose your money. So be patient. Look somewhere else if you need to trade something. See if you can find something somewhere else. But don't trade just because you're bored. Don't trade just because, fear of missing out. Don't trade just because you're anxious. You're afraid you might miss something there, like fear of missing out again, the kind of thing. Let the chart set up for you guys. It means, yes, you're going to trade less often, yes, but it means the likelihood of you being correct is increased, right? It still doesn't guarantee your trade's going to be correct, but at least it means that, hey, you've got more of a chance of you actually making some money, right? And that's the goal, right? That's the goal. It's to make money consistently, right? Let me see here. Data, you're a mess, man. Let me see here. What's going on, Hank? He says, greetings from a new DXY high. Yep. Merrick, what's going on? He says, the Great British Pound USD monthly chart, hidden bull div from 09 to 22. What do you think, man? I've been watching that sterling USD chart for a while. And if you look at that, I think we've got a good possibility of a monthly swing failure pattern printing. So we've got what? We've got about a week left to the end of the month here. I would be watching that. It could be a heck of an opportunity to get in, right? Could be. The dollar still hasn't turned down yet, but, we're stretching pretty thin up there. And so there should at least, it seems like coming up sooner rather than later, there should at least be some sort of significant pullback, something that lasts a few months at least, right? And so when it does, you should see, sterling and everybody else kind of rallying against it. So, what happens? Well, we've talked about the USD yen here over the last couple of months now. We're talking about how the yen has dropped to these, 50-year lows and whatnot against the dollar. And I think within the last couple of times I've discussed it, I think we were talking about the possibility of the BOJ, the Bank of Japan, there kind of intervening in what that would mean and what they'd have to do. And I said, if they did, I'm not sure they would really do a whole lot, but that they would have to do something pretty significant and consistent. I mean, they would have to be just really committed, right? So what happened? So just recently here the other day, BOJ steps in. They start buying yen, right? Now, the thing is, I think what they're probably looking is they're going to have to sell U.S. Treasuries, to bring up dollars and whatnot for all that to buy that yen, right? So, that seems kind of bullish for the dollar. But as far as the DXY goes, the USD yen is only about 12% of the value, right? It's the second largest behind the Euro USD, right? Which is about 58%. So, as always, between the Euro USD and the USD yen, you get about 70% of the weighted value of the DXY, right? So let's jump over there real quick and see what we're looking at. All right, so here we go. We've hit this target up here at the 112,627. Continued rally through there gives us a target of this orange range, which is basically 113.93 through this large. Remember I gave you this target, this EQ here a while back? I said, as long as it continues to rally up, that's going to be the target we're going to look for, right? Regardless of whatever the count was at the time, right? Looking for it potentially to rally up here. Well, here we are. We're just about there. That top up there is right around 114.33 or so. If we zoom out here, is it a daily or larger? Let me see here. This is, okay, that's weekly. Yep, monthly. Whoops. Let me get that back over there. Yeah. So this is a supply cluster up here, which gives us, supply structure, right? See here. There we go. Yeah. So there it is, right up there. And so right above that, of course, is the R5 pivot on the monthly. As you can see, I've had this larger term, retracement here set up for there. right around that area. So again, could potentially see that to rally up into that area there. But, even on the monthly here, you can see how well overbought we are on the RSI. Stochc RSI topped out there. Weekly, we're printing lower and lower here, down through here, right? But, again, so we had bearish divergence here and here. We no longer have bearish divergence there, right? So it's between, this swing high and this swing high. Stochc RSI is almost overbought again. Let me see here. What else can we see on this? Let's in a little bit more. 3-day. Again, oversold or overbought with the RSI and Stochc RSI. Daily, of course. Again, same idea. So what I'm saying is, in the grand scheme of things, we are most likely nearing a top, which means it's probably closer than not. Now, that doesn't mean it can't continue higher, but at this point, we really kind of pay attention and we really kind of start looking for that, that top to kind of come in. So locally here right now, we've got like this working support right around the daily pivot. So a breakdown below that, on the larger time frame would say, okay, maybe wave 5 is complete. If this count holds up, breakdown below wave 4 at 104.636 is going to add confidence to that, right? But yeah, I mean, again, who'd have thunk it, right? Oh, wait, I did. Back over here. Remember, we were talking about the lows over here and talking about this rally up to 100, 115, right? 120 even. And so here we are. Now, there is that saying that markets can stay irrational longer than you can stay solvent. This is kind of the idea, right? This continued push, or in terms of like the Euro USD or something, the continued drop, right? And so the key is not to get overly excited, not to just jump into anything. You're looking for your opportunity, and it means that you're going to need to wait for a setup, right? And the good thing about this is this has been such a big move that you're not going to miss a whole lot when it does start coming down, when you're waiting for that confirmation, right? So stop thinking you have to grab the absolute top here and wait for that confirmation. As far as the daily goes, I mean, you could even look right here around this R1 pivot. You see this candle right here that drops back? That swing low there at 110.462. Dropping, but let's say this was here and it dropped below that, right? I mean, if you were absolutely needing to get in on something like that, and remember, you can trade the dollar futures there at the ICE exchange. But if you were really looking to do it, I mean, you would get in right there, right? And your stop loss would go right above the swing high, right? I mean, that's what you would do. That's how you would trade that. And if it breaks out above that and hits your stop loss, no move in the stop loss. No, maybe it'll just go a little bit higher or whatever. Get the heck out of the trade, guys. Don't sit there and keep nursing the loss on that, okay? So, as long as the dollar continues to rally, it's going to cause pain, across everything else that's risk on, right? So what we've talked about for years. It's not that the dollar causes these other things to happen. It's just that when money's flowing into the dollar, it makes everything a risk-off environment, right? People are putting it in the dollar because they're worried about the other things, right? So when the dollar comes down, when the DXY drops down, what that means is people are feeling like they can take on more risk, and markets become more of a risk on. So that money comes, that money comes out of the dollar and goes into, your risk on assets like stocks, crypto, stuff like that, right? So this is kind of what we're looking at. Everybody, I don't know. A lot of your crypto Twitter bros like to look at crypto as like this singular market. And I've been talking to you guys for years about how it's all still interrelated with everything macro, especially as we got more and more into it, right? Excuse me, institutional money and whatnot into it. And I think just, again, it's the same thing I've talked about for years here, guys. Everything's kind of what's going on with the dollar. The dollar kind of tells you what's going on, right? Again, if things are going into the dollar, then they're coming out of other things, right? I mean, simply, that's as simple as we can look at it. If the dollar's dropping, then money's coming out of it, and that money goes somewhere. And so, again, usually that's where it goes to those risk-on assets, right? So, I mean, there's no need to try and figure out bonds and bond rates and Fed fund rate, and is the Fed going to continue to raise or going to continue to drop or anything like that. Just trade the dollar chart there, right? The DXY chart. Just trade that. As far as understanding what's potentially going on with everything, this is going to tell you, what's going on in general. Let me see here. What's going on, Blaze? Good to see you. Hank says the parity psychology is now broken. What he's talking about is €1 equals $1. He says that's tough for the euro. Tough thing about charting major global currencies, that fundamentals play an enormous role more than emotion. I tell you, man, no. I'm telling you, doing this for as long as I have, it's in the charts. Period, end of sentence. We want to find reasons why it's not, but that's still part of that whole idea that news tells you what's going on overall with it instead of just knee-jerk reactions, right? We know, you can look historically, proven time and time again that news is always behind, right? News is always after things happen, right? It tells you what's happened, not what's going to happen. Same thing with the Fed, right? The Fed's always reactionary. So, as all, central banks are. It's something I'm going to sit here and argue about. Again, it's something I've told you guys time and time again. It's something I continue to show you over and over again. And just because maybe you read the chart and you get it wrong doesn't mean that isn't the way it is. It just means that you read it wrong. That's okay. That happens. We're all humans, guys, right? We're all going to make those mistakes in reading the charts. We can't possibly know the outcome of every decision and then the decision tree off that, right? So the best way I want you guys to understand this is in life, and much like in the markets here, right? So you've got a decision, and simplest decision is either A or B, right? Well, here's the thing. Let's say you choose A. Well, you don't know what B means, right? So B goes out, and then B hits one. Simplest thing, AB. So now you have BA, right? But now you got BB. And so, and you still have A over here, right? A, and then AA and AB, and we can't possibly understand all those decisions and how they might ultimately come together, right? That's why risk management is so important, right? And so I think once you recognize that and you understand that, I think you stop worrying, as traders about, oh my gosh, I got to be right or I got to be wrong or whatever. And you just start looking at, okay, well, here's what it says here. And so if we're going through this level, then that means we could potentially see price going here, right? But if it goes to this other level, it means we'd see, it's invalidated and we're going the other way. And then you just apply proper risk management. As long as you guys do that, you're going to be a lot further ahead, or, especially the New York, a lot less down than what you're going to be if you do anything else. And these are the things that people don't generally tell you guys. They're just like, listen, I've got this system. Man, it's like crack, right? It's like they're trying to sell you crack. Man, I got this system, man. I'll tell you what. If you pay for it, man, it's going to make you so much money. You're going to be so rich. Guys, stop buying the nonsense, right? Even if it works, and sometimes they do actually work, the problem is most people don't have enough experience in the markets to understand how to apply those systems properly. And not only that, but how to do proper risk management when it comes to that, right? A lot of trading, guys, boils down, listen, are you listening? A lot of trading boils down, most of it, to this. Where is a valid validation level? Where is a valid invalidation level? And appropriate, proper risk management. Right now, guys, no matter how you're trading, that is the fundamentals of trading right there. All right? You have to know, however you're trading, that if it goes above a particular level, that it's increasingly likely that it's going to continue in that direction. Or if it goes down, below a certain level, that's increasingly likely going to continue in that direction. That's what trading is all about. Everything else is just a way of trying to be less general and more specific. That's what all the systems, everything trying to do. But generally, what I just said was what it boils down to, right? So, if you can understand that and accept that, then it opens you up to a lot more profit potential, and a lot less potential for loss, right? Because you don't just take trades just because there's a chance. You're more thoughtful about it and what's going on with it. Let me see here. What are you guys going on here? Yeah, Euro USD continues to drop down there. But, again, looking at those larger time frames, not just in those USD-based FX trades, but also in legacy indexes and stuff like that. I mean, most time frames going up through the daily or even the weekly are getting to oversold at this point now. So, my thought is I don't see any reason why things need to bounce today. They could at least stall out toward the end of the day, right? But I think with the amount of decline we've had, and then this week being, and currently the end of this week being this extra push lower, I think we get at least a bounce through, at the beginning of next week through the end of next week, if not some sort of reversal. But I think we at least get a bounce of some sort for next week. So I think if you guys are trading stocks and whatever, next week might be some good long opportunities. If you're trading FX, I think it's possible that, you might have some long, most things other than the dollar, right? So short dollar opportunities. But, what does that mean for crypto? Well, crypto's 24 hours, right? So I'd be interested in watching what's going on with crypto this weekend because, we could see kind of like a heads up to what may be going on with the rest of the markets when they open up next week, right? So yeah, I'm interested in what's going on with crypto this weekend as we enter the end of the weekly. The dollar to be topping out, right? That's the major catalyst there, right? Again, the idea that the dollar's topping out means money, and it starts pulling back means money's coming out of it and going somewhere. So yeah, that would be the big thing that we're looking for at the moment, sure. We see here. Shoo, what's going on? He said, I remember sailors saying to mortgage your house and buy Bitcoin. Yeah. Like I said, I think it was around April, around those swing highs there, right? And again, I don't bring that up to do anything other but then to get you guys to understand that just because somebody has a lot of money and they're talked about a lot doesn't mean they necessarily know what they're talking about, right? We're human beings. We're all susceptible to market madness at the tops, right? To getting euphoric. Sailor's not a trader, I think he's even said that. So, again, when you have somebody who's not a trader saying, hey, take on all this risk and debt to going all in on this risky thing at the top, at this top where everybody's euphoric, well, you should probably think, well, maybe not, I'm sure some people probably did, though, unfortunately. Yeah. But yeah, so that's kind of crazy thing, right? Okay, yeah, so it looks like you guys are on top of this YouTube thing. Yeah, it looks like issues going on there. So, if you are, jump on my Twitter. We're streaming live there as well as and Twitch, of course. So, jump on that, right? Bitcoin Anarchist says, well, this is a tad bit underwhelming. What exactly? What part of it? Again, the idea that if this is some sort of bottom in here, then, it's a great time to buy, right? But, if it is a bottom, then you've got a lot of time. You don't have to buy here, guys. If this is some sort of bottom, then you're probably looking at 100,000 plus, right? And so you've got a lot of upward movement. You can sit back a little bit and wait on a larger time frame for more, more confirmation. If you're an investor, right? But I think if you're getting in on a larger time frame right now, say like Bitcoin, right? Let me kind of zoom out here a bit. I think, if you're getting in right here, you absolutely shouldn't have your stop loss any lower than the swing low here. Because if it breaks down through there, there's multiple possibilities on how far it could go, right? And you don't know what it is. Now, most people, when they trade, most amateur traders, they go, well, if it hits my stop loss here and I get out, then it turns back up and heads back up, then, oh my gosh, I lost all that money, right? What they fail to ever realize is that there's a good chance that if it does dip down below here, it could continue much further down. As long as you are, trading properly, right? Then this decline through here, especially if you're new, man, there's no reason you guys should be losing anything more than 1% of your total portfolio in any one trade. So if your portfolio is $1,000, you shouldn't be losing more than $100 in a single trade. Oh, I'm sorry, more than $10. I said $1,000, right? Yeah, there's no reason you should. But then you go all back. Good times, right? All right, looks like we're back here now. Man, oh man, crazy stuff going on, guys. It looks like Restream might have got hit there for a minute with whatever's going on. There might be some kind of bigger, DDoS attack kind of thing going on. Sorry, guys. I'm doing what I can here. But anyway, yeah, so hopefully everything's good now and you guys can hear me all right. But yeah, so remember, at the bottoms, generally the market, everybody in the market, if it's a major bottom, everybody, the professionals and the retail are all usually wrong, right? Everybody kind of joins in with the sky is falling or it can't possibly go any lower, right? Can't possibly, the sky is falling if you're at the bottom, or if you're at the top, it can't ever, it's never going to go down, right? Other than that, usually, your retail and your professional traders are going to be at odds more times than not. But usually when you get to those more large, stronger bottoms or tops, they're usually in agreement. So, yeah. All right. Is it echoing still, guys, or is it not echoing anymore? Hopefully not. Hopefully not. So, yeah. So, anyway, there's kind of where we're at here, guys. Let's pull up some oil real quick. Let me see here. Oil. Well, it's taking a while now. Well, all right. Let me try something else here now. Looks like I'm frozen up. Are you kidding me? Let me see here. All right, it's fine for you, Higher Low Crypto on Twitch. It looks like I'm having some issues locally here now. I don't know if you guys can still hear me or not. I can't see the stream anymore. Well, doggone it. All right, let me see here. Oh, I'm still good over here? Okay. All right, good. All right, y'all are back on mine now here. Oh, man. Well, I'll tell you what, guys. I think I'm probably going to get this done here real quick since there seems to be a whole bunch of internet issues. There's oil. Oil's kind of hitting my target down here, daily S2 pivot. So we'll see if that's enough or if we'll go a little bit further here. Looking for a breakout above 86 and 68 cents. That's that wave B there, to hint that it may be complete and heading back up here. So that's what we're kind of looking at. Just a 4-hour daily says maybe dip a little bit further. I think it's if it's going to continue down further here. I think we've got maybe this daily demand structure here right around $75.80. Let me make sure. Can't be larger than wave 3, right? Yeah, so that would be the top of that range there. So it's got to reverse prior to that. If it dips down into this blue range here, I'm going to have to recalculate this count here coming off. Let me see here. We look at silver real quick. Futures, of course, talking about paper here, right? So we've got this dip down here. Let me see. This is the swing low at 1877, 1876. All right, so potentially have a flat correction here. May be complete here. May come down just a bit further to this wave 4 area here, right around $18.49 or so. We're looking for a breakout above 1996 to signal that wave 3 is in progress up to around $23, minimum expected target. Let me see here. If we look at gold here, remember I got it labeled in here. There we go. Again, the paper, guys, the futures, right? We dipped down. We hit my S1 4-hour pivot target here. Looks like maybe closer to the bottom than not. You can see that we're almost oversold with RSI. Stoke RSI is oversold. Let's see here. I wonder, let me zoom out here a minute. Let me see. Let's dip down. Let's go to the monthly. So monthly, we may be getting a bullish SFP from March 21 here. So monthly, we got about another week. I want to see, can we close back up above this 17.57 and 40 cents. If we can, we should be rallying up. You know, we should have a pretty good rally up in there. Let me see where we are in terms of counts. Yeah, so right now I've got a flat correction potentially going on here. And so we'd be looking at least a target up here at around 1887 or so. Around this wave 4 resistance on that. No, I don't have antivirus software running. So, yeah, so we've got this headed up here. But again, nothing really changed. Everything looking like the way it is. I mean, it looks like we got 5 down, 3 up. But again, you know, that gets us that potential double top here. And so breaking down below this swing low would mean we'd be looking to get down, you know, 12.5, 1300, somewhere right around there, right? Based on the height of that. So we'll see, you know, if we get the breakout back up here, then things get a little bit more interesting. But, you know, we'll see. We're looking for that rally up over there, more likely than not, sooner rather than later as we do this. But ultimately still looking down overall. Let me see here. And then nat gas, right, guys? Oh, doggone it. Let me see here. There we go. That's what I'm looking for. All right, so we were going sideways here. I had this target down here around the S2 pivot on the 4-hour. We hit that this morning. It finally broke down out of this range. Looks like 1, 2, 3, 4, 5, or a 5th wave in progress. See, we're well oversold here. So what I'm looking for, a breakout above this kind of this S1 pivot area on the 4-hour. That swing high right there. It's going to hint that wave 4 is probably complete. Better confidence coming above this wave B here at 8.123. Definitely dropping above wave X here will kind of signal that that's done, right? I've got this right now as maybe an A, B, C here. Could potentially be a triangle, right? So A, B, C. We'll get D and E. And then we'll break up for wave 5 and finish out and then come down. But I think it looks like there may be still some further upside. Gas prices, for those of you that, you know, over there, across the pond over there, I feel for you. We can look here at 3-day, potential lower down, right? Weekly still has some room to come on down a bit. But yeah, I think we still got a bit of further upside there before we're done overall. But right now, locally anyway, it looks like it may be done or nearly so. And then we'll look for that rally on up. So, you know, maybe you can make up that that difference in cost there by trading some natural gas future contracts there, guys. Maybe kind of hedge your there on gas, right? So anyway, Yeah, so that'll do it, guys. Let me see here. I think we're still going here. My side is not, right? Let me see. Anyway, so yeah, so it does look like I'll have to get the stream back on here. Anyway, so that's it, guys. That'll be done. Yeah, so I mean, again, we're looking to see, do we get this support here? Everybody wants to go down further, watching for support here. The possibility is that, overall trend remains down. So ultimately what we're looking for is a breakout above 22,800 here on Bitcoin. But here's the thing. The other possibility is maybe this is 3 and this is a triangle, right? A, B, C, D, E, and then it dipped down. I've been talking about this range here with everybody being so negative, potentially just being a bear trap, which in terms of Wyckoff would just be a drop below the swing low here and then rally back up and close above it. So it'd be a spring to trap the breakout traders. And so I could see that happening if this is, A, B, we get C, D, and E. We'll get a thrust down for wave 5 to give us that spring and then pop back up, catch people. So that's the other kind of possibility. I'm not really interested at that as being more than what I just said there, unless we start seeing 3 waves up here. If we're getting 3 waves up, then okay, then it likely becomes A, B, we'll get C, we'll get D, and then we'll get E. So up, down, up, contracting. Then we'll look for that to down. That's just more pain for everybody. Everybody waiting for either a breakdown or a breakout and kind of just stuck in this range, right? So that'll cause pain. People get irritated and anxious and impatient and whatnot. All right. All right, guys. Listen, I'm going to go ahead and get out of here since we're having a little trouble with the stream here. As always, remember, the only thing you control in the market is how much you lose. So please keep working on that risk management. And man, oh man, I guess I'll see you guys next Tuesday, 11 a.m. Central Standard Time. We'll see how things have looked this weekend. We'll see if we get that rally at the beginning of the week. Maybe a risk-on rally kind of thing, at least through next week. Bounce, if not some sort of maybe reversal. But we'll see how this week, how this today ends, and then how next week begins. All right? All right, guys. As always, remember, the only thing you control in the market is how much you lose. So please keep working on that risk management. Discord, I'll see you guys over there in a bit. Tier 3, don't forget, we have our makeup session from Elliott Wave yesterday. We'll have that today at 3 p.m. Central Standard Time. So that's about 2 hours and 45 minutes. Yeah. All right? All right, you guys have a great weekend. Trade safe. And looking forward to seeing how this weekend turns out, how beginning next week turns out, right? All right, guys. Y'all take care.